So before we jump into tonight's class, I wanted to just point something out in regards to options and why they're so lucrative. So here we have Green Mountain Coffee Roasters, GMCR. It's down 20 bucks, right? Closed at 49. It's tanking on earnings. It's down 42%. And just really quickly, for those people who don't know, I just want to point something out in why we play options and why this move in GMCR is going to be so epic come tomorrow. So here you've got on the left side the call side and on the right side the bid side, right? So all of these calls and bids, what you're buying is the right to own it either long or short. If you're buying calls, you're buying the right to own it long. If you're buying puts, you're buying the right to be short at a strike price. So let's take the $40 strike price, for example. So this date here, May 4th, which is Friday, that's the expiration date. So what this says is today, at the close, you could have bought the right to own GMCR long at $40 for $10, okay? Really, you're paying it at a $50 per share basis because 40 plus 10 is $50. So that's kind of your break-even point. So if it's below $50 come May 4th, these are going to lose value, right? Because you can guarantee a price, a strike price, you have to pay a premium. So at $49, the premium was $10, so you were paying a $1 premium, okay? Here we have the right to be short at $40 by Friday. Obviously, the premium was much, much less for that. It was only 50 cents. Why? Because the stock was at $49. So if the stock doesn't drop to $39.50 by this Friday, these are going to be worthless. Who wants the right to be short $40 when it's at $49? Not that many people, which is why it's only going for 50 cents, okay? However, here we are. GMCR is down to $28.75. So it's going to open around $28.75. Somebody in chat, what do you think is going to happen to this strike price tomorrow morning for the right to be short GMCR at $40, which closed at 50 cents today? Where would you expect the right to be short at that price to open at tomorrow? If somebody in chat wants to give a guess. It closed at 50 cents and it's at $28.75 now. No, because remember, we calculate our break even. The right people will be willing to pay at least fair value for the right to be short at $40. So if it's at $28.75, what is fair value on the right to be short at $40? Remember, to calculate, on the call side, we added the premium, so we added 10 plus 40 to get us 50. Now we're subtracting the premium, so it's $39.50 because it's $40, the $40 strike, minus 50 cents. However, at $28.75, what would you expect this premium to go up to tomorrow? Very good. Brent has the correct answer. $11.25. Right around 11 bucks. And again, we calculate that by simply subtracting the current price from the strike price. We know that it'll open up at least at $11. So let's say each contract represents 100 shares. So if you buy one contract at 50, you multiply that by 100. You're spending $50 for one contract, okay? So let's say you took $500, a small amount, relatively speaking, in my opinion. That would get you 10 contracts, okay? So you bought 10 contracts at 50 cents, right? You put in $500. Tomorrow, if it opens here at 29, you'll be able to sell those 10 contracts for $11. So 10 times 11 times 100 is $11,000. So in putting in $500, you're now going to profit $10,500. Okay? The flip side of that is, let's look up here at these calls here on the $50 call. The $50 call, the right to be long GMCR come Friday at $50, closed at $3.60. So what was the break-even point by Friday? What do these contract holders of the $50 calls, where did they need GMCR to be by Friday at the least? If it closed at $3.60 for the right to be long at $50, what was their break-even point? Very good. Brent is on his stuff. Mafia, I see you're looking at the bid, which is why you got 53.45, but it closed at 360. So yeah, 53.60 is the correct answer. So what's going to happen to these tomorrow? Where are these going to open at tomorrow? Yeah, I mean, you'll be lucky if they open at 10 cents. Exactly, close to zero, close to zero. Without a doubt, these are going to open at a penny, okay? All of these strikes are going to open at a penny. I mean, and the reason is, who wants to own the right to be long GMCR at $50 tomorrow if it's opening at $30? That means it's going to need to move 70% in a day and a half or 2 days. That's not likely. So you're going to see the premiums on the call side come completely out. It's going to get sucked out. The $40 calls are going to go to zero. The 41s are going to go to zero. The 42s are going to go to zero. The 30s closed at 20. Those are going to be at a couple bucks, okay? So that's the other side of it, right? But the put side, which is where we recommended buying and where many of us big board traders got in, I personally got the 43 strike puts at $1.28. So my trade, for example, I bought 10 contracts at $1.28. How much principal is that invested? 10 contracts at $1.28. Yeah. Exactly. Now, these are going to open 43, simply subtract by 29 is $14. So these are going to open around $14. So I put in $1,280, and I'll be able to sell them for about $14 tomorrow. So how much will I be pulling out if I'm selling them for $14? Yes, 14,000. 10 times 14 times 100, because remember, one contract represents 100. So in putting in $1,280, I'll be pulling out $14,000 tomorrow for very good profits. Now, here's where it gets tricky, because who's to say, oh, we just got lucky. That's just gambling, okay? You got lucky, you got the move right, okay? And here's where that person is wrong, all right? You go back, and before you make a bet like that, you look at what has the chart done historically. Well, we had an earnings report here on the 10th of November. We had an earnings report here on the 2nd of February. And then we had a company announcement here on the 9th of March. So, surrounding these major company events, what's the one thing that we have in common? Exactly. Huge moves, okay? Now, can somebody tell me why my bias was to the downside on GMCR? How come I wasn't bullish? It gapped up $20 here in February. Who's to say it wasn't going to make that type of move again? How come I got on the bearish side instead of being bullish on this? Any guesses? Let's look at a longer term chart. It's in a downtrend, but more than that, I'm looking for something more specific relative to the recent activity of the last couple months. So this is what we had coming into today. Does anybody see anything other than that it's in a downtrend? Anything more specific to the last couple months? Yeah, these are all true points. However, the thing that I see the most is I see a stock that downtrended, based out, bottomed out, and made a big move higher from $40 up to $70, about an 80% move higher, but then gave up all of those gains within the span, all within this year. So it closed at $46 in 2011, rallied all the way up to $70, but however, it gave up literally 100% of those gains. So this is in contrast to a stock like Sears Holdings, which we went over yesterday. Oopsies. Which we went over yesterday, that had downtrended for a long time for the last couple months, yet it hadn't given up its gains for the year. It was still up a lot on the year. GMCR had given up all of its gains on the year. Combine that with the points you guys made on volume, and that told me that there was no support on this stock. There was no interest in keeping it above the break-even line, and that's a problem. That's a red flag to me. That's a cause to be bearish. That's a reason to be bearish. So, options isn't just about being lucky, okay? I knew I could make a risk like this because in the most recent history, the stock, number one, had a major history of making huge moves. You're talking about a 40% gap here, 20% gap, 20% gap. So I was banking on at least a 20% move. And the chart, in my opinion, said that you should be bearish based on what I just outlined. So the only luck that's involved is instead of getting the 20 to 25% move down I was expecting and making 200, 300%, I got a 40% down move and I'll make 1,000 to 1,500%. But this is why our options room is growing, and this is why I encourage people to watch all the videos we have on options, because for only risking $1,200, which isn't a lot for me, I was able to gain incredible exposure to a potential move. And like I said, you could have only put in $500, which, most of our members can't afford a $500 loss. And if you can't, then you shouldn't do this type of stuff. Because just like on the call side, if this would have gone the other way, my options would have gone to zero and I would have lost $1,200. But for the potential rewards of making, 500 to 2,000%, that's a nice risk reward to me. And this is an example of in my opinion, moderate risk, extremely high reward. Everybody thinks that there's only high risk, high reward type trades, and that's not true at all. You just have to be smart in your selection, okay? You can't just draw a name out of a hat and say, oh, it's going to make a big move. It doesn't work like that. You need to look at the chart and see if history supports your thesis. So now that I have everybody's attention explaining how we're going to make 1,000% tomorrow, we'll get started. First question is, The stock price was $49 when I bought the calls. It was about $49.50 or so. So first one, is there any way I could have predicted or avoided what happened today with ICPA? I know we are supposed to take profits on the way up, but I wasn't even being greedy. My plan was 20 to 25%, then exit. It just bottomed out. Maybe you can analyze the chart, etc. Okay. So, first of all, I feel bad for this person because they think they weren't being greedy when they were. Just because you're not expecting 100% doesn't mean you're not being greedy. This person bought ICPA after a, let's see, 1,000% move higher. So he wasn't being greedy when he bought, but he was being greedy from the perspective that how can you possibly expect ICPA to just keep going? This is, we just talked about it, risk and reward. This is a risk-reward scenario that is not in your favor whatsoever, okay? Even though he wasn't being greedy with the gains he wanted to make of 20 to 25%, he was being greedy with his expectation for the stock based on what it has done in the most recent past, okay? As short-term traders, we're going to focus on the short-term past. The short-term past for ICPA showed me a stock that was up 100% in 2 days, 2.5 days, and 1,000% in 2 weeks. Okay? Showed me a stock that was rising on lower volume, which we talked about in last night's class. Okay? So, in my view, he was being greedy. Okay? Just because you're not being greedy with your plan doesn't mean you're not being greedy with your expectations for the stock based on what it has done. Okay? So that's what this person did wrong. You just didn't step back further enough and ask yourself the questions you need to ask yourself before buying a position, where such as, okay, if I'm buying at let's say, it closed at 485. So he said his plan was to make 20-25%, then exit. That's good. I'm very glad that he had a plan. That shows me this guy's already learning a lot, and I know he's going to learn from this. So it closed at 485, right? So 20 to 25% would have put his target at about 6 cents. On Friday it closed at 265. Monday it opened at 3 cents. So his target of 6 cents was 100% higher than where it was just a day and a half ago, coming into today. So now that I pointed out like that, I bet he probably realized that, yeah, that yes, his plan of having 20% isn't greedy by itself, but when you consider that 20% is going to be a 100% move for the stock after it had already moved 500% anyway, then that sounds a little, it sounds like his expectations are too high, okay? When you have a high stock like this, you need to be quick and you need to scalp it quickly and you need to get in and out because you don't know when the bottom's going to come out. And you saw that today. It fell below support and it just started tanking. And we'll talk more about this one later today because somebody requested it to be reviewed. Okay. Second question. How do you find the stock's float number of shares? What significance does this have in the penny stock? Okay. This is one of those encyclopedia type questions. I personally just trade stocks. I don't really look up floats or short interests or stuff like that. But the one site for penny stocks that I do know that typically offers the float is OTC Markets. So like if we go here, we type in SNPK, click company info. And here it tells us the float is supposedly 145 million. Now, what I do know though is how to calculate a float. Okay? First of all, the float is the number of shares that can freely trade. Okay? So you have outstanding shares. This is the number of shares in the company that are currently issued. You have authorized shares. This is the number. This represents the maximum number of shares the company can issue. And then the float, this is the outstanding shares minus any restricted shares, okay? So for instance, you can have SNPK, for example, can have 420 million shares outstanding, OS, but if the CEO owns 300 million of them and they are restricted for 6 months, just using hypothetical examples, the float is only 120 million. Okay? So the company will be valued based on the outstanding share count. Outstanding shares times share price equals market cap. Yet the float is what's going to actually trade. And his example is SNPK was said to have only a 10 million share float. Not sure where he found that, but anyways. Does that mean that the powers that be, those manipulating and running the play, can only distribute 10 million shares and then must have to crash it to buy more shares cheaply before sending the stock higher again? Well, I just told you what it means when there's only X amount of shares in the float. And he's correct in that, yes, usually in something like SNPK, the float is being held by a small amount of people, usually the people behind it, as he correctly points out. And the reason they do this is so that they can be in control of where it goes, okay? And we pointed out in another video that I'll link in about why they get in control of the float and the benefits of doing that. It was in the classroom video. I hope that wasn't the one that wasn't able to get recorded. Oh yes, here it is. So from April 24th, this is a must-watch video if you're trading penny stocks. There's just no way around it. So that video will explain this concept of why the float gets in a small number of hands. Okay, last question. What is the best broker to get fast buys and sells on a penny stock? This is another one of those encyclopedia type questions. I can only answer questions I have experience with, and that's E-Trade and Broad Street, both of which have been good to me in terms of fast executions. I'm sure if you do a simple Google search, you can find reviews on various brokers. All right, time for charts. The first one is GALE. Low volume overall. Nothing real appealing about this. Looks like it just came off of a halt. Needs to get back above these recent lows. So it needs to crack 150. You can see that we've got a lot of lows at 154. So needs to get back above 150. Above that, we have 165. On the low side, we've got today's low of 131. And then this low is really key at 125. Below 125, I'd expect a retest of between $1 and $1.10. One to keep an eye on, but don't really like this downtrend. Don't like how it gave up all of its gains from this move higher. So let's wait for volume to return and for it to show signs of life. UBRG. So gave up all of its gains on the day. Must have got promoted, judging by all the volume coming at the open. So just another one that I really don't like unless it can show us some type of follow through tomorrow. Any guesses as to what this huge volume today and the fact it gave up all of its gains, what that tells us? Exactly, dilution. And we've talked about that dilution occurs on every single promotion. But we have good dilution and we have bad dilution. What do we want to see from promotions when there's dilution going on that tells us it's an okay play to, even though there's dilution going on, we can still play it? Exactly. They let it rise. They let it rise. So these people clearly, didn't let it go. So just, I don't like it at all. ZNTR, when we put on our watch list on the weekend because of this volume here on this day, I like this action today. The volume is very low though, so we still need to see more volume, but we did make a higher high and we actually closed at the highest level. And yesterday it printed 4 cents, but I looked at the tape yesterday and there was 20,000 shares traded at 4 cents. So $800. So in the grand scheme of things, nothing. Now, also what I like is that the last couple minutes of the day today, it had 155,000 shares, which makes me think that maybe somebody's going to be promoting this one tonight or in the morning. I saw some promotion from a couple sites last night on this one, but the compensation was only $5,000 or so. So maybe now we'll start to see bigger size budgets being paid out. So this is one to watch. I'd like to see it now stay above today's low and this 10-cent close yesterday. So 10 to 11 cents is our key support. Resistance is today's high of 14, so 14 to 15. Above that, we could test 20. I'd like to see volume pick up though, but it might just be one where the volume's not going to be that great. Remember, when the volume's small, we have to play small. When the volume's big, we can play big. If it's average volume, we can play average. So, 600,000 shares traded today. You don't want to go buy 100,000 shares because then you're, 18% of the total volume. But you can buy, 10,000 shares and you'll blend right in. So just remember to put things in perspective like that. HUN, very nice day yesterday. Huge gap up. I like the way that it held yesterday's low on today's action. Yesterday was the highest volume on an up day for the stock in at least 1 year, at least 2 years, at least 3 years. Highest volume on an up day for the stock. I like that it got back above these levels here. Okay, otherwise you might have had a bearish head and shoulders long-term pattern forming. You can see what we're dealing with is the resistance from this big move down. So we've got a couple levels that I'm going to watch, and you can already see they're coming into play. Why am I choosing these levels as opposed to choosing somewhere in the middle of this? How come I'm choosing these points that I just chose? Look at the chart again. Anybody have any guesses or reasons for why I put those resistance lines where I did. Exactly. Previous support, new resistance. Exactly. And that makes it easier. Look, the bottom line is we've got this big move lower right here. We know resistance is obviously going to be here, right? But it's just kind of hard to know exactly where. If we look at the daily, again, we know resistance is here in this range, and we know it's going to be here in this gap down. But by looking at the weekly, it's a lot easier because we can pick out exact points. We can pick out the previous support levels. And those just so happen to coincide with the middle of this range. So it makes sense, right? If it makes sense, it'll probably make you dollars. If it doesn't make sense, it's not going to make you dollars. So here we go. Resistance between 1575 and 1650 just about. That's the key resistance that we need to break above. Our key support is going to be today's low of 1517, yesterday's low of 1512. So the 1510 to 1517 range. Below that, I would expect it to maybe fill this gap on down to 1430 up to 1485-ish or so. Ideally, it holds this gap, and that'd be a great sign because if you look, notice where it gapped above. It gapped right above this previous high, okay? So that's definitely a good sign. Now we just need to get through that resistance, and if we can do that, we'd have this high here. That's when things could really, oh, sorry, this is the monthly, not the weekly. So we've got this resistance. That's when things could really open up because our next resistance point wouldn't be till these levels up here, which isn't until about 1860 or so. So while it is below its 2011 highs, its 2011 highs held its its 2011 lows held its 2010 lows. Its 2010 lows held its 29 lows. Put in a higher high in 2011 compared to 2010. This high in 2012 is higher than the 2010 high. So while it's off of its 2011 highs, there's some good things going on in this chart, and I like it overall because it showed me some resilience here, put in some higher lows, breaking above recent highs, and now we just need to get more work done. We need to break out above this level and then this level here. So this is a nice one potentially. I really like this weekly volume pattern. It's only been down 1, 2, 3, 4, 5 down weeks so far in all of 2012. That's pretty good for an individual stock. Zynga. Highest volume on back-to-back up days today since this move here in February. However, even after that move, it gave up all those gains. After high volume up moves, it's had a tendency to give up those gains. So that's the first thing I noticed, okay? That yes, we have some good things happening in terms of volume, but when we look at the chart for guidance, it is telling us that those good volume days haven't really led to follow through, okay? Pretty obvious downtrend right here is what we're dealing with. And there's, we've got a nice little downward channel here, okay? So we need to break out above this channel line, which is going to be $10, okay? But there's still money to be made between $8.90 and $10. So let's look at the 15-minute chart. Okay, here we go. This is the key resistance level right here. And here we go again. We talk about previous support. If I extend this way, look what we've got here. This low, which acted as support, then became resistance right here, and I suspect it might act as resistance again. So whether you're looking at a daily chart, a weekly chart, a yearly chart, or just like we are now, a 15-minute chart, you can always find recent lows and recent highs and map them out as future resistance points, okay? Previous support was at $9.12, $9 or so. Then it broke, so then we expected it to become new resistance, and it did just that. here, which was what, Friday, on Friday early in the morning. Okay, so now here we are coming up to it again, and you can see we need to break above that high. We need to break above this high of 915. If we can do that, then we can then have these lows here around 935-ish or so, 930. And then the big one is going to be this 954 level from here. Let's go back further. 60-minute chart. So we've got 915, 935, 950, and then $10 is the big one if we really want to have any type of serious trend reversal, okay, and a breakout of this downtrend. As for support, we do have a nice uptrend going on the 15-minute chart at this point. Okay, we've got a couple of them really. So this is the first one. That's really been a main uptrend for ZNGA. So let's hold this trend. That's going to be right around 890 at the open tomorrow. Below that, I would expect these highs possibly around between 850 and 870 to be support. Why am I choosing that? Well, because this was a resistance level and this was a resistance level, and we already saw it act as support here. So moving forward, we know that demand is probably hanging out in that range in the immediate term. So I'd like to see it continue to hold. So definitely in a downtrend. Volume pattern historically has not been very positive, even after good days like the last two. But we have this low here at 797, and we've got a higher low here at, oh, excuse me, no, it's actually a lower low. Okay, so just ignore that point. Yes, 797 low, and then 795. Okay, so we actually did make a lower low. So just not, that mutes the point I was about to make that we had just made a higher low, because we haven't. Okay. So like I said, key support 850 to 875. If it breaks below that downtrend, that uptrend line on the 15-minute. DEJ. Testing a downtrend. Okay. Broke out of it a little bit today, it looks like. Okay. However, there's a greater downtrend off of this high here that it's still going to be below. So we broke above this first downtrend line. Now we need to break above this downtrend line. And you know, what's funny about that downtrend line is it's going to coincide with our recent lows. So everybody should see why I'm putting my support line here. We had 1 bounce, 2 bounce, 3 bounce. We broke below it. So we all know at this point, now it's going to be future resistance. And that's going to be tomorrow at what is the 38-cent level, and that coincides pretty directly with our downtrend line. It's funny how it works out like that, isn't it? So we need to break above 38 to 40 cents on high volume of greater than 2 million shares in order for this to really get going anywhere. Let's pull it back further and look. So overall, what I see is a chart that just hasn't gone anywhere, okay, in the last 3 years. It's been just choppy, choppy, choppy. Came into 2010 at 35 cents. Came into 2011 at 35 cents. Came into 2012, at 38 cents. So just overall, it's just not really a good chart there's no real trend that we can pick out and put on our side, so to say. So we need to break 38 to 40 cents on high volume. And let's look at the 15-minute chart. So all the volume came in right here. Big demand spike from 31 to 35. Therefore, we want there to be demand in that range again. Where there was demand previously, we want there to continue to be demand. So 31 to 35 cents is key support. ARIA, nice chart here. One we talked about I think at this point here maybe, or a month or two ago. Just beautiful chart. Really nice uptrend. Broke above its March highs at 1675. This is an all-time high today, if I remember correctly. Yeah, all-time high on this stock. Nope, not an all-time high, but highest level since 2000. Okay, and 2000, there was some real volume, so we do have to pay attention to that volume, without a doubt. Now, unfortunately, because we can't get daily candles from back then, it's going to be hard to pick out exact resistance. But we've got a high at 1750, so that's our first resistance point. This candle was just crazy from 29 to 48 to 12. That's unbelievable. Must have been some .com something going on back then. So 1750 is the only thing we can really gather from this long-term chart. Overall, though, what I like, there's something much different about, this is a monthly chart of last 20 years. There's something much different about this period here from 2009 through 2012 than there is about this period here from 1999 to 2000. Anybody want to tell me what it is? Even though the price went much higher then, there's something much different about this time. Exactly. Much more volume. Volume is much more consistent. And that's good, okay? Because when you have inconsistent volume like this, you get inconsistent price movement. And that's exactly what you had back then. So the volume's consistent, and that's good. It's not going to be as crazy, okay? Now this is just a sick trend. I mean, since February 2009, this thing has been down 1, 2, 3, 4, 5, 6, 7, 8 months out of, what, 42 or so? So that's great. I mean, that's just, you can't argue the bullish trend here. And it's only been down back-to-back months one time in the last 4 or 5 years. I would imagine there's not too many stocks that can say that. And that was August, September when the market was really bad. So, like I said, it's hard to map out resistance. We've got today's high of 1713, and then that 1750 high that we have, that we just looked at on the monthly, and then $20, just nice round even number, would be next resistance. Support, what I like, we've put in higher lows here. We've put in higher highs. Higher high here, and now we're putting in another higher high. So I would like to see, and it's already happening, is previous highs start now acting as support. So yesterday's low of 1616 is a key level. Needs to stay above 1616, otherwise it could pull back into this range here, between 15 and 16. Extremely bullish chart. CDII. Just don't like it. Big gap down, low volume move higher. It bounced up 63% today. I missed the bounce. The bounce was today, it's not tomorrow. Okay? This is an example of showing up to a party and your friends are already drunk. It's just not fun. So just stay in that night. Just stay in and watch a movie. There's nothing that I can really talk about I'd expect there to be a lot of resistance from this move down. So 55 cents, major resistance above today's high of 50. So 50 to 55 cents key resistance. Key support from looking at the 5-minute chart, it's going to be these lows here at 42.1, 43.1. But again, this is just risk reward, not something I really like. SYNC, sick move today, all-time highs for, and 1, 2, 3, 4, 5, 6, 7 straight up day. So again, it's hard to map out resistance with these. We've got today's high of 1088. Above that, 11 is a round number, and then 11.50, 11.75, $12, 12.25. You know, that's how you kind of have to play it with these when you get into, you know, blue sky territory like that. As for support, a ton of volume traded in this, 925 to, let's break it down even further. Okay, so it must be very thinly traded because 120,000 shares took it from 925 all the way up to 1075. So this is the key support range right here between 930 and 975-ish. Ideally, it doesn't go below this afternoon low of 978. So call it 965 to 975. Huge move today. No reason it should give up, you know, a good portion of these gains. Okay. So let's see what tomorrow brings. But very good volume. First 5 minutes of the day, let's see if we trade more than 100,000, 150,000 shares. That could be a very bullish indicator of another good day. So this is definitely a bullish chart to watch, but it's up 7 days in a row. You know, so not sure how many days it can keep going up in a row. ICPA, we talked about a little bit earlier. This was expected, in my opinion. I mean, you can't just keep going forever. This beautiful chart made a sick move higher, and people took profits. That's just it, really. It needs to consolidate. It's going to need to work out this move. Highest volume on a down day in about 3 months. Okay, so that's, you know, and we talked about this last night. We kind of mapped this out to a T, that it was going up on lower volume, and that unless it had a high volume up day, that we were going to run into a day like this, and that's exactly what happened. So now looking at the 5-minute chart, we've got key support. It bottomed at 3 cents, so 3 cents is key support. Above that, though, it played around with this 3.5 level. So that's going to be our key support, is at 3.5. Just call it 3 to 3.5, okay? Resistance, you've got these highs at 4.2, this high at 4.45, and then 5 cents. Again, first 5 minutes of the day today, 2.2 million shares traded. That was not greater than the highest 5-minute volume yesterday. So that was a red flag right away, and I think we talked about that exactly last night. 3.5 million shares traded within the first 15 minutes. That's lower than the 4.1 that traded yesterday, lower than the 4.05 that traded Monday, lower than the 4.2 that traded Friday. So all the signs were there that this one was coming to an end. All the signs were there. I'm telling you guys, if you want to sell the top, pay attention to the volume within the first 5 minutes of the day, first 10, 15 minutes of the day. Because unless news comes out in the middle of the day that creates new interest, that volume at the beginning of the day is what is your example. That's your reference point for how much interest there is today. At a higher price today, the interest was lower today than it was yesterday, and you knew that within the first 5 to 15 minutes of the day. And you had 1, 2, 3, 4 hours before it finally tanked. So you could have gotten out, no problem. ALXA, ugly downtrend. Let's take in some uptrending stocks, guys. You guys send in all these downtrending stocks. Remember, just because something is cheaper doesn't make it better. Numerous studies show that stocks that are making all-time highs perform better in the long term than stocks that are making new lows. The reason the general public usually struggles with investing is because they buy what's cheap instead of buying what's strong, okay? I would rather buy something that's strong and expensive than weak and cheap. So ALXA, just ugly downtrend. It has done some basing though, and we do have a good volume pattern over the last couple weeks. Highest volume on back-to-back days since middle of December. So best volume on back-to-back days this year so far. Okay, but we need to get above this 70-cent level. It capped us today. It capped it on the 13th, and it capped it on the 8th of March. And it's not surprising because that level acted as previous support, and that's what we're dealing with now. Okay? I do like the volume the last 15 minutes of the day today, and it broke out to new highs for the day. So if we can break that 70 to 72.5 cent level, then we can target this high here around 79 cents, and then some of these lows at 85, 83 cents, okay? But again, with these downtrending stocks, you're going to have so many resistance points along the way. So overall, what I would say is the stock is clearly in a downtrend. I don't like downtrending stocks. But in the immediate term, I do like the volume pattern recently, and it's showing signs, mainly this higher low compared to the low in February, and the volume pattern, that it might be ready to break past 70 and test the 80 to 85 cent range. But I would wait for a breakout above 70 on a high volume day of greater than 6 million shares, instead of guessing that one is coming. So within the first 5 minutes tomorrow, what might tip me off that a day like that is coming is if it trades 250,000 to 300,000 shares or greater, and the price is increasing. ACPW. Okay, another downtrending stock. Similar to ALXA, downtrending stock, but the volume pattern is decent lately, okay? And it's dealing with resistance that it hasn't been able to get above for a while. Needs to get above $1 on a volume day of greater than 1 million shares. Then you'd have resistance at 105. Okay? So this range right here is our key resistance point. Above 105, we've got this high here at 111, 113, 120. As for support, looking at the 5-minute chart, all the volume traded in this 91 to 94 cent range, so there's no reason it should go back below that range. We want to see demand be at a spot at which it was before. So let's just do a quick recap. Okay, so we had 13 charts today. Let's see how many are in an uptrend versus a downtrend. GALE is in a downtrend. UBRG is in a downtrend. ZNTR is in an uptrend that just started trading. HUN is in an uptrend over the last couple months and then a downtrend off of the 2011 highs, so we'll just call that neutral. ZNGA is in a downtrend. So that's 4 downtrends. No, that's 3 downtrends out of 5. DAJ is in a downtrend. 4 downtrends out of 6. ARIA is in an uptrend. That's very good. 4 downtrends out of 7. Okay. CDII is in a downtrend. That's 5 downtrends out of 8. SYNC is in an uptrend. So that's 5 out of 9. Ooh, LUXR I didn't do, so we'll do it. This is in an uptrend. All right, we'll do it right now. So that's 5 out of 10 in a downtrend. All right, so LUXR is in an uptrend. Very nice recovery. However, it's coming on very low volume, right? We want recoveries to come on high volume. An example of what can happen when a recovery happens on kind of low volume, LQMT, ugly day today, right? And I was off on that yesterday, by the way. I thought LQMT would have a nice day today, but it didn't break resistance and it broke key support at 55, so we didn't get burned anyway. LUXR, low volume, move higher. Need to clear this high at 150, then we could target this high at 160. As for support, we've got 3 higher lows in a row, so now we need to hold today's low of 129. Ideally, it'll stay above yesterday's high of 135. Okay, so that's 5 out of 10 that are in downtrends. ICPA is in an uptrend, but that came to an end today, so that's kind of a wash. ALXA, we're in a downtrend. So that's, what, 6 out of 11? ACPW is in a downtrend. That's 7 out of 12. And we noted ICPA is neutral because it was in an uptrend and is now, that ended today. So you guys sent in 13 charts. Of the 12 that have trends, 7 of them are in downtrends. So more than 50% of the charts being sent in are in downtrends. I need to do a better job teaching, because what do I teach? Where do we want to be? What type of stocks do we want to be playing? Exactly, uptrending stocks. We want to be in uptrending stocks. Why do we want to be in uptrending stocks? Because that means there's a history of demand outweighing supply, and we want to be on the side of history, okay? So when I see people struggling, and then I go and I check what's getting emailed in, it's no surprise that people are struggling because they're playing downtrending stocks. I hope, and I don't want people to start doing this on purpose, just keep sending in the charts you send in, and I suspect people will start having better success coinciding with myself receiving more chart requests on uptrending stocks. So I'm going to pay attention to that moving forward. It'll be my little Stockhaven indicator. All right, guys, so that's it for tonight. Remember, tomorrow's the last day of class, no class on Fridays. And just a heads up, in the summer, we'll probably be moving down to just 2 days a week, just because we do have lives in the summer. We don't have lives 9 months out of 12, but for 3 months out of the year, I have a life. All right, guys, everybody have a good night. I'll see you tomorrow.